Well, Disney reports after the bell today the media giant's crown jewel, ESPN, is seeing its ratings go through the roof and its subscriber model the envy of most networks.
For more on the Disney story, let's check in with RBC Capital Markets analyst David Bank, who has an outperform rating on the stock. David, thanks for your time this morning. And ESPN, you've said it yourself, a powerhouse. Give us some context here. I mean, what would Disney be without ESPN?
Yeah, you know, we think the most attractive secular business in all these media conglomerates right now is probably the cable channel business. It's a dual stream revenue model with both advertising and contractual subscription fees. And the absolute, crown jewel in the world of cable networks has got to be ESPN. It's by far the leader in affiliate subscription fees. So, where would they be? They'd be in a much worse place. That's where they'd be. They're pretty happy to be owning that property right now.
It's hard to criticize ESPN right now, but I mean, they generated a bit of extra bang for the buck, right? Because some of the NFL matchups this year just happen to have a lot of fans. That's a little bit luck of the draw, is it not?
Yeah, I mean, you're talking about primetime ratings, which are up year over year, kind of close to 20%. Total day part ratings up, I think, about 6%. So, they definitely got some luck there. But, that's counterbalanced by the fact that they've had some bad luck over the past year or two, in that by far the most important advertiser for ESPN is the auto category. So the auto category is really taking it on the chin, obviously, and that has hurt ESPN. I think we're starting to see a rebound, and ratings are generally helping them.
And what about how continue to grow the brand? David, everybody's trying to get onto more phone platforms or web platforms. Is that the area where ESPN gets bigger, if they can get any bigger?
Yeah, I mean, I think those are incremental positives, but frankly, the growth is built into this business contractually, because there are escalator clauses built into the affiliate fee increases for years and years ahead. And so, I think they're intelligently attacking the web. They actually have a pretty successful strategy with their 360 property, and they're active in terms of the mobile market. But the core business is just so good that, the rest is gravy.
So compare the ESPN relationship with the cable providers to, what was going on recently with News Corp and that battle that was going on.
Well, I mean, I'll put it in this perspective. We think that the News Corp, the Fox O&Os, probably got retransmission consent in the early years of something like 75 cents a sub, which is pretty incredible considering they were getting virtually nothing before that. But put it in this context, ESPN is probably getting close to $3.75 a sub. So, you could tell the value of the content, or at least the perceived value, is really just exponentially greater.